Hey, how's it going, guys? This is Alex Cook. So I got a lot to talk about in this video. It's going to be a longer one, but that's because a lot has happened. There's a lot we need to talk about. So as always, I'm going to talk about certain investments in this video. I'm going to talk about certain asset classes, and it is not intended to be investment advice. That's because I can't tell who's watching this video, so I don't know what would be suitable for you. You have to make a decision for yourself on what is your level of risk tolerance. I'm going to talk about crypto in this video, and crypto is a very high volatility asset class. So you got to make a decision for yourself on what is risk appropriate for you or not. So this video is just intended to be informational. So unless you've been living under a rock, everyone's been hearing about coronavirus, and markets and traditional asset classes have been selling off. What I'm going to talk about in this video is what we've seen in markets, traditional markets. And I'm going to also talk about what we've seen in crypto, and then I'm going to talk about some pretty interesting developments that we've seen in Chainlink. And I think one development in particular has really been brushed aside almost just because everyone's been focusing on coronavirus so much. So first of all, equity markets have sold off a lot. Today we saw the circuit breaker hit, and some of this I don't need to recap for you. And by the time the market opens tomorrow, who knows? There'll probably be new stories out entirely as well. But point is, we've seen what Treasury yields are. They're low. We've seen what's happening to oil. It has fallen substantially. We saw the Fed do an emergency rate cut, which is very rare. It's only happened a handful of times since the late 90s. Last was when Lehman blew up. But one thing that I really want to emphasize, though, is that markets are not selling off just because of coronavirus. We've been, I'd say overvalued for a while. Just take a look at forward PEs and just make a graph of it. One thing I suggest is do an internet search for it's called the JP Morgan Guide to the Markets. It has a lot of charts on fundamentals that are really good to have as a quick reference. And one of it you'll see is the forward Ps, and you can see that, well, they're high relative to where they are historically. So, we've seen rich valuations in equities. So a sell-off, look, it was going to happen at some point. I made a video about a year ago talking about how the yield curve has inverted, which is a sign that we're at a peak of a credit cycle. And look, these things happen. Now, I want to be clear. I'm not saying we have a 2008 style crash, because I think it's going to be easy to take this video out of context. But look, recessions happen, sell-offs happen. Like, these things happen. So if it wasn't coronavirus, the headline was probably going to be someone else. So, when the news first broke on coronavirus, I wasn't really sure what to think of it, to be honest, because I think all of us these days are maybe a little skeptical of what we see on TV or, maybe what you read on the internet. But, there are a number of people that I respect when it comes to risk management, like Nassim Taleb, that brought up some good points, which is that, look, even if the fatality rate is, only 2%, if that is affecting 30 or 40% of people being infected possibly, well, do the math. You're going to be eating up a huge portion of ICU capacity. That'd be a tremendous drain on hospitals that, that would have second and third order effects as far as treating, well, really anything else. So the point is, I don't think this is a minor thing. At the same time, though, the market is not selling off just because of coronavirus, which it looks like now we're starting to see possibility of it being contained. We've seen some pretty extreme actions. I mean, look, I live near Austin, and we saw South by Southwest canceled. We saw Ultra get canceled. So it seems that maybe these worldwide actions are slowing the growth of it. But look, if it wasn't coronavirus, it would have been something else. Like at a certain point, what is the rationale behind the valuation on some tech companies? I don't think you can justify it whether or not you have coronavirus. All right, so that's what we've seen in traditional markets. Look, recessions happen. I don't think we're going to see a 2008 style crash just because the banking system is in a much different level of strength than it was back then as far as leverage goes. But these things do happen, and they happen about every 10 years. So now what we've seen in crypto, that was going to be the next thing that I want to talk about in this video, is to be honest, I think crypto has actually been fairly resilient, all things considered. I mean, take a look at some oil companies. look at some of the exploration production companies that got cut, almost in half today. And these are big companies too. These are not some hole in the wall companies. When you see a company like ConocoPhillips, take a beating like it did today, or you take a look at you could look at the whole S&P 500, the beating that it's been taken. I'd say all things considered, crypto has been fairly resilient. Look at Bitcoin. It went back to its lows that it had in December. This is the kind of asset class with the volatility that it normally has that, I would not have been shocked to have seen a bigger swing than what we saw in it. So one of the reasons why I like crypto going forward is, what we've seen historically whenever we're at 100% debt to GDP, regardless of recession for a second, regardless of that, let's put that aside for a second. Whenever we see over 100% debt to GDP, we usually see printing, just because if you look back in history, that's usually what happens. Well, now on top of that, we now see, central banks are trying to take action to stimulate the economy. Is that going to work? Well, okay, I think it's going to have some effects. Am I too optimistic? Not really, because, again, these things happen. But look, point being is that they're going to try to pump more money into the system. All right, if they debase the US dollar or, Japanese yen, euro, whatever the case may be, I view this as a positive for crypto. Okay, debase, that is, maybe somewhat of a pejorative term, but it's just reality. We are devaluing currency by pumping more into the system. Now, might have an effect to stimulate the economy, sure, but that's not the point for the moment. The point is that this could potentially be a bull catalyst for crypto. The other bull catalyst that I'm really interested in this year is the Bitcoin halving. So that's a recap of what we've seen in crypto. The last thing that I want to talk about is what we've seen in Chainlink. And this is one thing that I think, because of all the craziness that we see in the market, that this development has almost been ignored. And I think that's kind of a shame, because it is a pretty big announcement. And that is the announcement of what's called the baseline protocol. So the baseline protocol, so Chainlink is going to be a technical advisor to this. So what it is, it's an initiative by Ernst & Young. So this is a major accounting and consulting firm. And essentially what they're trying to do is make a blockchain technology, like Ethereum, more accessible for businesses, for them to run the processes. So this is exactly the kind of thing that I've been looking for. We have moved away from the 2017 sort of YOLO startups, or kind of whiteboard theory about what can blockchain do for companies. And we're now starting to see, some pretty high-powered firms like Ernst & Young announce that they're going to be exploring, not just exploring this, but they're going to be actively working on, building out this technology for their clients. And this is what we need, because I think some of the optimism that we saw in smart contracts back in 2017 was premature. Because look, I believe in the technology long term, but I think people underestimate just how long it takes for, well, really any organization, but big businesses to switch over a lot of their enterprise software. They bring on board consultants like Ernst & Young to help facilitate this. So look, a company can't just shut down its operations because it wants to switch from one piece of software to another. Especially something that's still very much in development, like blockchain. It's like the analogy I would use is it's like changing a tire on a car while the car is still driving. So it's a big development. I want to see what Chainlink can do for this team that Ernst & Young is putting together. But it does show that blockchain is being taken more seriously by businesses. So to recap this video, been a lot of topics, but again, a lot has happened in the market, and I want to be able to put out content when things are salient. My goal is not just to make videos just for the sake of making videos. I probably could get more views if I just put out clickbait, but I'm just not going to do that. That's not what I'm about. I'd rather grow my channel through word of mouth and by just putting out good content. So to recap, markets have been selling off. Coronavirus is a concern, but I don't think it's the only concern. Crypto, I think all things considered, look, it's a volatile asset class. It's going to go up, it's going to go down, but I think all things considered, it's actually been somewhat resilient. And I do think that to the catalysts, the Bitcoin halving, and also central bank pumping action, pumping more currency into the system, that could be another catalyst as well. And I think all this is overshadowed a pretty big development that we've seen in Chainlink. So want to recap with that. So here's normally where I'd say if you enjoyed this video, hit subscribe, and thanks for watching. But I do want to say too that, look, I know a lot of people watch these videos because they're interested in what I got to say about Chainlink. And I know this because if I put Chainlink in the headline, a lot of people click on it. And if I talk about anything else, you know, it is what it is. But, you know, I'd encourage you, if you do like this channel, if you do like what I have to say about Chainlink, I have another video that you might find interesting as well. I talk about why I went from being pretty skeptical about crypto to changing my mind on it. So I'm going to include a link to that below. So if you enjoyed the content that I make about Chainlink, you might enjoy some of my other videos as well. So I think in particular, you like this one where I talk about how I became more of a fan about crypto, more of a fan of crypto instead of a skeptic. So I'll include that link. But check out the other videos on my channel. And if you enjoy, hit subscribe and take care.